I noticed something very peculiar today when studying the most recent Federal Reserve H41 statistical release. Take a look. Can you see what I see? I placed at the bottom of this slide the top section of Table 5 of the April 22nd report, and at the top of the slide the same section from the February 26th report, which is the last Federal Reserve report prior to them expanding their balance sheet with exceptionally large asset purchases. Pause the video and stare at these two excerpts for a moment. Keep your observations in your head, and then press play again. If you notice that in February, the Federal Reserve distinguished between the gold certificate account and the SDR account, whereas in the most recent report they are combining both assets into a single line item, then congratulations, you noticed the same thing that I did. This either means that you are as obsessive about detail as I am, or it means that you are as crazy as I am. Either way, you should probably get your head examined. But seriously, every time you see a change like this, you should ask yourself the question, why? Let's see if we can figure it out. Let's look at another section of the April 22nd report. This is Table 1, which is the consolidated statement of condition for all Federal Reserve banks in aggregate. Notice that in this table, the Federal Reserve still distinguishes between the SDR certificate account and the gold certificate account. This is good because we can use this information to ask ourselves the question, how much is each of these accounts actually worth? Should we even concern ourselves with them? After all, they look fairly tiny compared to many of the other line items. Let's take a look at the SDR account first. As we can see, on September 23, 2009, the SDR account at the Federal Reserve suddenly increased from about $2.2 billion to $5.2 billion. After this date, the SDR account was maintained at a constant $5.2 billion, which means that, like the gold certificate account, the SDR certificates are not marked to market. But we can figure out what the marked to market value of the SDR account is today with a little bit of math. On September 23, 2009, the exchange rate for the SDR to the dollar was known, as I show in the upper right-hand corner. If we consider that $1 was worth 0.6299 SDRs on that date, then we can quickly conclude that the Federal Reserve had a claim to 3.28 billion SDRs. Over the past 10 or so years, the dollar has appreciated relative to the SDR. The SDR account would have been valued at $4.47 billion if the Federal Reserve had marked this asset to market on April 22, 2020. Now, let's look at the gold certificate account. And if anybody would like to understand the gold certificate account better, please watch my Architects 3 video. I placed a link in the description. According to Treasury and Federal Reserve reporting standards, gold has a constant dollar per ounce price and is held on the books at the statutory price of $42.2222 per ounce. We can use this to determine the current marked-to-market value of the gold held in the gold certificate account. According to Table 1 of the statistical release, the statutory value of all of the gold represented by the gold certificates is $11.041 billion. If we use the $42.2222 per ounce statutory price, we can quickly conclude that the gold certificate account represents control of 0.2615 billion ounces of gold. Now, the London PM gold fix on April 22nd was $1,710 per ounce. This leaves us to conclude that if the Fed marked this gold to market, it would have had a value of $447 billion on April 22nd. This is 100 times the value of the SDR account. Keep that in mind. Here I summarize the combined gold certificate and SDR certificate accounts from February 26th and from April 22nd. The numbers are reformatted to allow changes in the account holdings at each Federal Reserve Bank to be compared. Notice that the largest changes were Boston, New York, Atlanta, Dallas, and San Francisco. Unfortunately, because the SDR and gold certificate accounts are now combined, we can't distinguish movements of one versus the other. But we do see that they move, and we see that the total aggregate amount hasn't changed between then and now. But one thing that we can ask ourselves is, what would make more sense? Are these movements SDR movements or gold certificate movements? If we assume that all of the movements of the certificates valued at statutory prices were SDRs, then we can calculate what the custody change would be worth if it was on mark-to-market basis. This is shown in the second to last column. And we can do the same exercise if we assume that the custody movements were all gold certificates. Those numbers are shown in the final column. An immediate observation that I have when looking at the SDR column is that the numbers are really tiny from the standpoint of the Federal Reserve banking system. One would wonder, why even bother changing the custody of SDRs? These numbers wouldn't really justify it. But when looking at the final column, we can see that the numbers are really quite meaningful. Instead of a few $1,000,000, now we're talking about numbers approaching the billions level. It seems to me that it is the gold certificates that are changing custody, even if the movement is somewhat concealed by the accounting change made by the Fed over the past couple of months. And why would the custody of the gold certificates change between the banks? The answer is simply that gold is money, despite Federal Reserve claims to the contrary. If it wasn't, then there would be no reason at all for each of these reserve banks to have their own amount and for them to transfer custody. Again, if you'd like to know more, please review my Architects 3 video in the video description.